Join us now, Tom Lee, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of bleed, that slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, and is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's in what. Besant was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact. The
Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Another clearing event, Nvidia. You expect it to be a bullish clearing event?
I mean, most likely, I think markets get very hesitant in front of Nvidia's earnings. Really? And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels.
I was wondering whether things were getting overdone when the journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. There's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. It's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute. But how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Attention, investors and market enthusiasts. The stock market is buzzing with electrifying developments, and the buzzword on everyone's lips is Nvidia. With an earnings report lurking around the corner and speculation mounting about key Treasury appointments in the Trump era, the market remains on the edge. Tom Lee from Fundstrat Global Advisors has sparked intrigue by affirming that despite prevailing uncertainties, the Trump trade sails ahead with strength. As Nvidia prepares to reveal its anticipated financial outcomes, experts forecast a revenue jump from last year's figures. Will Nvidia's report act as the much-needed catalyst to extend the market's broad rally? Let's dive in and unravel the unfolding market drama. Welcome back, everyone, to Investocracy.
I'm segueing to Nvidia, which is one of the few names that's up this morning, and 33 minutes into our broadcast, we haven't mentioned generative AI, we haven't mentioned Nvidia. It's sacrosanct to not get to those sooner.
Well, if you believe in what was put out by this company that we put on TV called The Information, if you believe what the information says, then it would be a massive shortfall and you should sell the stock.
I don't know that they said that.
Well, they said that Blackwell is late. They can't get it to work. Something very different from Michael Dell, whom I regard as being somewhat trustworthy since I've known him for the last 40 years.
That's true. Understood. And Michael Dell did come out in defense. To the point we made yesterday, though, is even if, in fact, it was true, it doesn't mean that demand is in any way being impacted over the long term. Maybe you have a quarterly hiccup in some way in terms of deliveries, but that would be about it. NVIDIA still stands alone, Jim, for them, it would seem.
Look, I say own it, don't trade it. I don't want to be confused by anything about the information because there's two things you need to know about NVIDIA. One is that they have incredible demand, far more than they can handle, maybe even enough to be able to do exactly where we are right now next year. And, secondly, there's no competition because no one is even remotely near them, including AMD, which is a company I like very, very much, but they're not.
And, for his part, Jensen Huang considers the data center now sort of its own supercomputer. It's almost one entity, is the way I've heard him describe it in any number of these podcasts that he seems to consistently do.
Yeah, he had another good one yesterday. I mean, there was an Atlanta conference for supercomputers happening this week. And once again, you understand that he's just a bigger thinker. He understands it. If the problem
where the largest supercomputer in the world is now, right?
Yeah, it's in Tennessee.
That's correct.
It's very Tesla's. Good. And by the way,
it's XAI. It's not Tesla.
Right. And what's incredible is that when you speak to Jensen, he'll just say they are amazing to work with.
Yep.
Remember, there was a conference call referenced by Elon Musk, which basically said, yeah, and they're good at it. But this is part of the brain of why we should have self-driving. And this man, Musk, has thought as far ahead as Jensen.
Yeah,
they work very well
Jensen
together.
has praised and basically sits in awe to a certain extent of what XAI was able to do.
Yes.
In terms of putting up that data center in Memphis, the one I referenced last week when he talked about the latest capital raise of XAI, some potentially as much as $6 billion in additional funds being raised by that company. Post-market value of $50 billion for XAI.
Well, I pay that
and almost all of it, going to go buying even more H100s and the like to increase the capacity of that already biggest supercomputer in the world.
People should realize this is not. I mean, let's say we were going 46 to Pentium Intel. It's not like that. You can have the H100s, which is not the latest model, the H200. This is all one generation old H100.
Right.
It doesn't matter. It all works because it's a software stack.
Right, because NVIDIA, that's what it's all about.
I mean, that's why Rubin is going to work perfectly. That's next year's iteration. What you're getting here is nothing more than an inflection industrial revolution in our country. And the fact that Taiwan Semi has to come here and build things, the fact that all of the companies who are in autos have to build things is a great renaissance. I wish we had the people. That's why we need the computers. That's why we need Blackwell. Which is the latest iteration of NVIDIA. And just to close the loop on NVIDIA, what will probably happen is that the inflection will be pushed back from the January quarter to the April quarter, but it'll still be incredibly lucrative.
The story unfolds with the charismatic insights of Tom Lee, who, with unshaken optimism, suggests the clouds hanging over the stock market aren't as stormy as they appear. While some may joke that predicting the market is as reliable as using a broken clock to tell time, Lee stands firm, especially with NVIDIA's impending report. The recent market jitters, triggered by speculation over the next Treasury secretary, are predicted to clear with impactful announcements shortly. Amidst this suspense, Lee also casts light on the Federal Reserve's dovish stance despite Jerome Powell's comments on rate cuts. If you look at December 2025, the number of implied cuts is still the same, Lee elaborated, suggesting a positive trajectory for the market. What's causing further excitement is NVIDIA's forecasted earnings, with analysts proposing a revenue leap from $18.12 billion a year ago to $33.12 billion this quarter. If NVIDIA's upcoming earnings soar past even seasoned expectations based on its succession of beating estimates, it could reaffirm investor confidence, aligning with Lee's bullish predictions. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
It's hard to talk about the market without talking about NVIDIA and Tesla, which are both really helping prop things up. And part of the turnaround right now.
100%. NVIDIA in particular today, it's really interesting because it's like NVIDIA is moving in a seesaw with the rest of semis to some degree. Yesterday, NVIDIA was down and the other semis that have been lagging was up. I just saw the numbers come through from Interactive Brokers the prior 5 days. The number of customer orders in NVIDIA over the last 5 days and Tesla were like 7 to 10 times what Apple was. Right, so just relative to market cap, the level of turnover and excitement around them is almost self-sustaining. And so it's really hard to handicap what's being priced. And now with NVIDIA, we're going to have a quick benchmark as to whether this was justified. We're going to get some guidance about next year's demand and all that stuff. So it's a little more tethered to the fundamental story, whereas for Tesla, it's a lot of, atmospherics, and we think good things might happen.
No, it's the longer he hangs around Mar-a-Lago, the more the stock goes
seemingly.
up.
It might never leave. Yeah.
All right.
Well, okay, so let's talk about NVIDIA. I want to give a hat tip to Josh, who's, the one I think of all of us who's been in it the longest, maybe you too, Jason. But look, the report is likely to be very good tomorrow. There's no reason to think it will be otherwise when you look at what the hyperscalers are talking about, CapEx, and basically every news item is people can't get enough of the chips. As far as the short-term price action, I would say really don't pay attention to it. A lot of this has to do with short-dated options that are people putting on to play the pop, presumably after earnings happen, and then they sell the calls, and that makes the stock go down. So don't be worried about the short-term action. Regarding tech in general, I think for the same reasons that we've all been talking about earlier in the show, people are going to be loath to sell these going into year-end. Again, you don't want to take a taxable gain, and if you're indexed or in some way benchmarked, you're not going to want to take the risk of falling behind the benchmark. By the way, and I just want to tie this into what Josh was saying a second ago, when you talk about bottom fishing and why it's really a bad idea right now, is because the opposite of what I just said applies. The things that have gotten decimated this year are likely to be tax loss candidates. They're likely to get bear mauled in December. That's not where you want to be shopping right now.
Jason, I know you've owned NVIDIA. Jim just said you might have been in it the longest. What do you make ahead of the print? Is it too late for someone that hasn't gotten in at the price action that we're seeing now?
I don't think so.
Okay.
I think the question is obviously is how sustainable is this ongoing AI compute demand? How sustainable it is going forward? Yes, the stock's up 189% year to date. We're expecting about $33 billion worth of revenue. We probably will surpass that somewhat. I think in the next quarter, however, when you really start to see Blackwell come through, that will be the bang out quarter, which is the quarter that we're working through right now, which we potentially will see $38 billion worth of revenue. So I continue to like this story. We hear from the hyperscalers and all the CapEx spend that's going in this space that obviously NVIDIA continues to capture. There's not a lot of competition for them currently. So I continue to like the stock, and I think that maybe you're not buying it right here, but there will be opportunities that present themselves. We've seen how this stock has traded over the last few quarters.
The potential Treasury appointees keep investors riveted, as the appointment's effect on policies could pivot market dynamics, bolstering Lee's cited Trump trade, predicated on deregulation and low-tax initiatives, elements beloved by traders. Meanwhile, predictions from top NVIDIA analysts such as Truist's William Stein and KeyBank's John Vinn capture attention, each maintaining buy or overweight ratings amid expectations for sustained growth windfalls despite supply constraints. Conversationally speaking, as NVIDIA strengthens its reputation, investors can't help but wonder if the magnetic pull towards AI technologies will sustain or fizzle like yesterday's news. Hint: Stein and Vinn both view the risk-reward ratio favorably long-term. As Blackwell ramps up and overshadowing Hopper's success seems imminent, NVIDIA's turn in the spotlight is one to watch closely. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What are you waiting for ahead of NVIDIA as an owner of this name as well?
There's a report out there that the implied swing for NVIDIA, up or down, is expected to be about 8.5%. That's in line with the average swing that we've seen over the last 12 quarters, but the company is much bigger than it's ever been. It's $3.5 trillion. So a swing of that magnitude is almost $300 billion, which is more than almost every publicly traded company's market cap. So we are basically looking at a situation where the biggest, most loved, most celebrated, most well-regarded stock in the entire market is coming out with an earnings report that yet again they guided higher going into. Analysts are now looking for $33.28 billion, which was a guide up from last quarter, 70 cents in earnings per share. That equates to 84% year-over-year revenue growth and 89% earnings per share growth. So my comments here would be, yes, we all hope for the best, but let's all be very honest with each other. A company at $33 billion in revenue, being able to do 84% growth on that and then telling you they're going to do it again next time is very low. I think the tightrope that NVIDIA now has to walk is to remain optimistic about the future, but not continue to push out those expectations and give people the impression that year-over-year sales doubling for a $3 trillion company is in any way realistic as far as expectations. I think they get it. I think there's a way to do that. I think there's a way to give guidance, sound optimistic, but not keep painting yourself into a corner of people looking for doubles every time you report. We'll see if they can pull it off. That's what I'm watching for.
As the market eagerly anticipates NVIDIA's report, a persuasive investment narrative coils around this star stock, with NVIDIA's year-to-date performance boasting an impressive 197.6% increase amid a volatile backdrop. The company's prospects indeed seem promising. Considering analysts' commentary on the insatiable demand for NVIDIA's technologies, even with supply constraints, its stock holds a futuristic allure. With critical support levels holding firm on major indices, perhaps now is a strategic moment for investors to contemplate embedding NVIDIA's financial narrative into their portfolios. Market sentiments express a palpable curiosity. Will NVIDIA's triumph continue to outshine its peers? Discerning viewers and investors, what do you make of NVIDIA's stellar ascent and its tantalizing promise for sustained growth in an ever-evolving market landscape? And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.